Now, for the last quarter, I am seeing that from January onwards, it is picking up, and it is expected to remain so for the whole year. So everything positiveness is there. Nothing to be afraid about the market size or market growth or demand.
Sir, Ridham here. Thank you for coming on this show. Could you
Yes.
also give us a little bit of comments on pricing? We are seeing divergent trends. East and South have been weaker than North and West. Are there any specific reasons for that? And how do you think pricing is evolving, particularly in your key markets?
Pricing will be depending on the demand supply. As I was saying, the demands are good. Only where somewhere in the north, so much capacity has not been added. So in north, even after full production by everyone, we are finding that the demand is still more. We are not able to meet the whole demand. So the price rise is very natural there. And in south, still the overhang of the capacity is there. Now the market is behaving very naturally. So west will be because of the high prices, because of the logistic cost as the material is coming from south. The costs are high, the prices are high, but the profitability will be only normal, not very high. The profitability, good profitability is there in the north only at present.
Okay, question on demand that Nigel asked you, a little bit more detail on that is, have you detected any change quarter on quarter? You mentioned about the slowdown in government capex. Now, government capex we know started picking up in October. So has that changed the tone on cement demand, particularly going into 2025, Jan, Feb? Are we seeing some different trends?
Definitely, yes. This year, every year, January, March is the last year to spend the remaining budget. The government expenditure is on a very high. In the March month, Holi is there every year, and even with 2 to 3 days less working, the demand is the highest, much better than about 5% demand high, 6% demand high on a daily basis in March. So, as I see, the demand will remain good. Now, the momentum for infrastructure projects are picking up. About 60% of the demand is housing. So, housing, as we all know from the other sector, that housing stocks of the flats and the residential units has come down sharply. So there a lot of construction is needed and infrastructure will be there. The 10% is other demand that depends on industry and others. So that is okay. So we are very happy about the whole situation.
Sir, are you seeing any weakness because of the stock market in real estate? Because there are a few people who are thinking that maybe this stock market weakness will now reflect in real estate demand as well.
These are blips. We cannot take them as a trend. Something will always happen and it will have some impact. But it is a continuous money flow. In fact, I can say that as you wants to read it, money will not flow into the equity market and then it will have to flow into the real estate market. These are the two big markets where you can park your money. So I feel those are outliers and not have much effect except for discussion. If the money is there, Indian growth story is intact and so much money is chasing that everything should be in a good atmosphere.
Sir, one last question from me. How do you see the trends in consolidation? The cement market, I used to cover cement 30 years ago, was very fragmented and we have had years of consolidation. Do you think that's over or there will be more consolidation in the next 5 years?
Definitely more consolidation will be there. Who will be selling, we don't know. Because when you consolidate, overall the cost comes down. The logistic cost for everyone will come down, production cost will come down. It is good for the country also, it is good for the industry also. So there will be sellers, always sellers, and consolidation will always happen. What has happened in last 2 to 3 years, the same momentum may not continue, but still it will be a much higher momentum compared to the past.
All right, Mr. Bangur, you said that you don't know who will be the sellers, but that could be sellers. The question to you is, will you be a buyer? Because actually in this inorganic market, you have been absent.
No, we are absent because we are having our growth story very calculated. We are not going for the sudden impulse. And if something goes cheap or at the right price, right now, even in the new industry, when we are putting a new unit, the return on sales may be 25% or so, which is being seen. But return on capital employed will be 7 to 8%. That's all. So when I want to buy higher at higher cost, you have to have more waiting period. Ultimately, this 7% because of inflation and others. In 10 years' time, it becomes very good. But you have to wait till then. We will be rational.
Okay. All right, Mr. Bangur, such a pleasure listening in to you. Thank you so much for joining in and taking Ridham's questions and some of our questions as well. Thank you very much. Ridham, before we hit a break, just in 30 seconds, because industrials and capex is a theme that you're still very optimistic on. So in the pecking order, where does cement fit in terms of how to play that theme? Would it still be large capital goods stocks makers ahead? Where does cement come in? And how do you look at industrials?
I would actually put cement much higher than the rest.
Okay.
Very simple reason, it's a non-tradable. So it is really not exposed to any threats from global trade disruption. Very hard to import cement.
Yeah.
So whatever we make domestically is what is available to us. In capital goods, you can get large-scale imports. Now, if tariffs realign because of all the free trade agreements that we are doing, because of the trade deal in the US, there could be threat to certain capital good companies. So you have to be more careful about those because we don't know how that will unfold. Cement is in a way simple, and also cement actually straddles many sectors. So not just private capex, but government capex, resi demand, office space. So a lot of things in that.
Yeah.
So I think the multiple drivers there, the consolidation that we've seen in the industry over the last 10 years, I think sets us up very nicely there.
All right. Well, with that, we have to take a very, very quick break. On the other side, we talk financials, another sector that Ridham likes a lot. Arun Selvan of Cholamandalam Financial will be with us to give us some more perspective.